So let me also. Good morning, everyone. Good afternoon, everyone. Welcome to our lead webinar series. Here with me is our senior analyst, Mr. Akolade Taufeeq. Going to be the one to take us to the review, the half-year review of our stocks and equities. So please enjoy the webinar. Thank you. Mr. Taufeeq Akolade, you can have the floor.
Good afternoon, everyone, once again. You are welcome to our webinar again. This is another series. We thank you for your time. And today we'll be looking at half year. We want to see what we have done as a nation across sectors and what are the opportunities and the outlook for the rest of the year. That is what the topic is all about. We've had series of webinars in the past, but we are just trying to a new administration came on board about 2 months ago. So we've seen some policy directions, and it is important we see how some of those things will affect our market and our business and our sectors. And we'll now begin to see what the future has for us. So that's what this webinar is going to be all about this morning, this afternoon. We'll try as much as possible to make it interactive. At the end of the webinar, there will be room for questions, so you can send your questions to the question and answer chat box. We'll be willing to accept those questions and then respond appropriately. So this webinar is going to be more interactive. So we'll be starting the webinar now, and then we'll try as much as possible to do justice to some of those things we have put in that slide. Of course, I have limited time, and the slides are many, but I'll try as much as possible to cover the critical part of this slide. So thank you. So I'll be starting from the slide 1. So that is the topic itself, review of half year, and then the outlook for the rest of the year. Of course, we are at the middle of 2023, and then we have a few months to round up the year 2023. So let's just see what had happened in the last 6 months, and then what are we expecting. So, and then the content, this webinar is going to really center on 4 major contents. And the first one is governance and macroeconomic environment, where we are going to talk about the macroeconomic variables. And we're also going to explain what has transpired in financial market as well. And then what expectation for the rest of the year. We still have like 4 or 5 months to round up the year 2023. And then we'll also look at the opportunity that is also available in various sectors of our market or in various segments of our economy. So that is the content. The slide 3 is still the governance and microeconomic environment. So I'll be moving this slide. I hope I'm audible enough, and can somebody confirm to me that the slides are moving? So because that's very important, so that we can see what we are presenting. So we are in the slide 4 now. So just as I've said, the first content of this webinar is governance and macroeconomic environment. Of course, in the last 3 or 4 months of new administration, we've seen series of policy direction in our market, in our economy, so to speak. But the basic question or the pertinent question we'll be asking ourselves is that, is Nigeria as a nation, do we need to reform, or we need to crash? Because we've seen our performance as a nation in the last 2 or 3 years in terms of our growth rate, in terms of what is happening in some of our sectors. And then we'll be asking those questions that, are we supposed to take reforms, or if we are not, if government is not putting those reforms in place, what do you think will be the likely impact? And then some of those reforms and some of the things we're going to talk about. The first thing we have to look at is our total debt profile. as at June, our total debt profile is still about 46.25 trillion naira. And in terms of in dollar terms, that's about $103.11 billion. If you look at our GDP growth rates, I mean, our GDP debt to GDP ratio, of course, is not something that is also good for our nation, because other countries of the world will be saying we have not really exhausted what we should expect, or we should exhaust in terms of our GDP growth rate, that we can also borrow. But if you borrow more, what are the implications? So our GDP growth, I mean, our debt profile is still rising. So we'll talk more on that by the time we get to other slide. But what are the other policy reform we have seen in the last 2 months? One of the things we have seen is that the PMS, that's the petroleum maintenance period subsidy, has been removed. That has been done. The exchange rate has also been unified by the new administration. And then there's also a proposal that the new administration is also going to increase the tax, that's the value-added tax, from 7.5% to 10%. That is also expected. It's not the new administration. I think the former Minister of Finance, those proposals had already been packaged before they completed the administration May 28th of this year. So it's expected. And then the electricity tariff is also expected to also increase, because even the discos are also telling us that the multi-tax tariff rates, what's the NAC, which is the regulatory body in that space, used as a benchmark for the exchange rate in the 2022, happens to be $440 naira per dollar. But now dollar has been unified and is going up, so we should expect a hike in the electricity because they are still subsidizing. So these are the things we have seen in the last 2-3 weeks, in the last 2-3 months of this administration. Subsidy removed, exchange rate has been unified, which is more of a devaluation. And then the VAT is also expected to also increase to 10%. So they are also planning to also expand the tax net. So it also increased the revenue to also address our revenues problem. So in the few months, there's tendency for the electricity tariff to also increase across these discos, the Ikeja, Eko Disco, Abuja Disco, Yola Disco, and some other discos. They are talking to the NAC in that regards. So let's also talk about the likely impact of petroleum price, because the price has increased. 2 days ago, the pump price has also changed to by 568 after they have removed the subsidy. Of course, we expect that the current market price of the PMS is going to be market determined. So you will expect the fluctuation either up or down, largely because any price that is increase in the price of the crude oil, the Brent, we are still importing our PMS. So we should expect that we are not producing yet. We are not refining any products. So once there's a slight price increase in the Brent, price of the Brent, there's no way it will not affect the underlying components of the PMS. That is why the price is also going up. So we shouldn't expect that the price is going to stable at 400 naira. It's going to be fluctuating. Even when the price also come down in the international market, we also expect that to also reflect in the price of the PMS in Nigeria. Of course, this has been fully deregulated about a few years ago. So some of the things we should expect in future is that inflation is going to rise, because the inflation, the effect of the PMS is going to increase inflation rate by 300 basis points. Currently, inflation is about 22.97%. We should expect more figure in inflation, because it's going to have direct effect on the increased price of the increase in transportation costs, and then increase in the indirect increase in the general cost of living. There's no way it's not going to increase the cost of living, because disposable income and average Nigeria is also going to deplete. So what we're going to have as a disposable income is going to be lesser. So the cost of living will be affected, and then it will also cascade down to the standard of living of an average Nigeria. So these are the things that are likely to happen. But one thing we also need to notice is that we have been expecting the Dangote refinery to take operations. So maybe probably by the time Dangote refinery take full operation, and then they can produce refine at optimal capacity, we also expect that the price of the PMS is also going to moderate, and then it's going to have a good impact on the cost of living of an average Nigeria. So this next slide is the continuation of the first slide, of the previous slide. It will also increase the productivity due to reduction in the downtime, because instead of spending more time in the filling station buying time is an essential component of factors of production, because timing is very key. But the fact that the PMS subsidy has been removed, you can drive into any of the filling station and get the fuel. So in terms of the productivity, we are expecting that it will bring a effective production because of time. It will reduce the time. And then the availability of the products, you also make it easier for an average Nigerian who owns a car or who drives car. You can drive into any filling station and get the product. If you see what happened 3 or 4 weeks to the general election, that there was first scarcity. People are spending 8 or 9 hours in filling station in getting the fuel. But with subsidy removal, some of those negative impact has been completely eliminated. So there's no way any policy will not have the good and the bad sides. So that's the good sides of the subsidy removal. And then the subsidy removal will a rise in the tax payment will also increase the government revenue. If you look at what has been happening in our nation, we have been facing the revenue challenge. So the only way we can grow our revenue to address some of the problems we have as a nation is to ensure that we increase our tax revenue and to also increase the tax net. So government will also benefit in terms of getting more revenue from the subsidy removal. And apart from that, we are also expecting a few direct occupation, but many indirect jobs that are also linked to some of those sectors as a result of the subsidy removal will also benefit. So we expect more job creation as a result of the subsidy removal, because it's also going to increase good investment in the downstream. And then once investment is also improved in the downstream, we're going to see that we're going to have more job opportunities in that sector as well. And then due to the prospective exports and the improved trade balance, our foreign exchange will also benefit because a subsidy has been removed. If you look at what we have been using as to service, to pay for subsidy, that has contributed about almost 25% of our annual budget. So the figures are almost 4 trillion naira. And if you look at it in the foreign currency, that's about almost $10 billion. So tell me, look at how much did Dangote even spend to also set up their refinery. If you look at it, I think it's even less about $20 billion. So if we are using over $10 billion for subsidy alone, there's no way it will not affect our nation in terms of trying to put the critical infrastructures that should turn around the fortunes of this nation. It will affect it because we are using major part of our earnings for subsidy. So these are the good benefits of the subsidy. It will have impact on our bearing reserve, and then government is going to have more revenue. And then the Federation Allocation Account Committee that used to disburse money to the 37, 35 local government in Nigeria, and the states and the federal government, they are going to have more money to be disbursed for the state and the local government for them to be able to turn around the fortunes at state and local government level and create more jobs if those funds are judiciously utilized. So these are the benefits of the subsidy removal. You could see from that figure, from the pictures, it will remove the queue in our filling station and a few other things as well. So we have also talked about one of the policies being introduced by the government in terms of floating exchange rates. In the last 3 or 4 months before the new administration, CBN has been supporting the Naira because we are operating under something we call fixed exchange rates, where we're going to have 2 markets. We're going to have the official market. We're also going to have parallel market. And that has really created a more of arbitrage opportunity. And that has really impacted on our foreign reserve. The federal government, the central bank, which is the monetary authority, will continue to support the Naira by ensuring that the disbursed currency, what they are earning from our earnings, to give to maybe private manufacturing and people that also needed dollars at official rates, while other people that also want to do genuine businesses are accessing them through the parallel market at higher prices. At a point in time, it was trading at 780, 790, 800. Some people are getting at 400. So all those bottlenecks has been removed. Exchange rate is now market determined. So let's now look at the impact of some of the policy in terms of devaluation. In the near future, almost 50% of Naira is going to have a multiple effects on the price level. And then the unification in the foreign exchange, we also achieve a kind of uniformity in the parallel and official exchange rate. And over time, it's also going to converge. So currently, the era of CBN giving dollars or FX to businesses or people that want to access FX at official exchange rate at 440 Naira has been completely eliminated. It's now market determined. which is the best approach or the best exchange rate policy adopted by the major economies of the world. So there will also be a reduction, possible reduction in our budget deficit and the cost saving in future. I also talked about in the previous slide. Now that we have been able to save over $10 billion or about 4 trillion naira, what we are using as a subsidy. Now we are going to have more money. And then the budget of a nation, our budget for 2023, about almost 21 billion naira, 21 trillion naira as a budget. 25 or 20% of the total budget is for a subsidy. Now subsidy has been removed. So the budget, there'll be less pressure on our budget. And then by the time government or Nigeria as a nation, we are not using larger percentage of our revenue to service to pay subsidy. The subsequent budget is likely not to be a deficit budget. Of course, we're going to have more money. I'll be able to run at least a balanced budget. A balanced budget is always the best because there won't be need for you to start looking for money from the other international financial institutions like World Bank or IMF to support your budget. So these are the impact of some of these policies. And then there'll be reduction in budget deficits, and then the FX will also attract inflows. If you look at one of the good impact of the evaluation is that once FX or a floating FX, which is market determined, it will attract investors. It will attract volume portfolio investors, people that are coming to invest in our equities market, while those also want to invest in our critical sectors in terms of foreign direct investment. They also bring their funds from other countries of the world. By the time those funds are penetrating our market, our country, is going to improve our FX situation, and we'll be able to build our reserve over time. These are the possible good effects of the unification of exchange rate and some of those policy decisions being taken by the new administration. So let's also go to this slide as well. Measure that can be possibly, this slide is saying measure that can possibly prevent free flow of Naira. Of course, Naira, the exchange rate in Nigeria has been unstable, even though it's now floating exchange rate, but there are other factors that will also affect our exchange rates. Why it has not been stable? Of course, as a nation, we are not producing. We have not been able to build our reserve. We need to settle our trades. So it will continue. There's no way our exchange rate will not continue to suffer, except some of these things have been able to resolve in terms of trying to increase production, trying to ensure that refineries are working, and then we are also able to attract foreign investors. We're able to improve our diaspora remittances. We have more money. But in the absence of that, Naira will continue to fall. But it will be the floating exchange rate is likely to improve situation of the Naira to dollar fluctuations. But these are the things we need to do as a nation if we really want to improve our situation in that regards. The first thing, we have to increase our export earnings. We don't need to depend only on crude oil. So we need to ensure we increase our export earnings. By the time we're able to grow our various sectors, agri sectors and other critical sectors that we encourage SMEs, we'll be able to export to other countries of the world based on the comparative or absolute cost advantage, and then we'll be able to attract foreign inflows into our nation. We'll be able to build our reserve. We need to increase our export earnings. That's number one. And number two, it's massive inflow of foreign direct investment. You need to ensure that policies are in good place, like the unification of exchange rates. We've seen that we are getting some inflow in terms of foreign portfolio investor and foreign direct investment in our markets. So some of those things, some of those policies that are being put in place over time, in the medium long term, they're going to have an impact on our economy. And then there'll be a kind of improvement in our foreign exchange earnings. And then appreciation will begin to see a Naira appreciation against the dollar. So it will reduce import demand, and the elimination of medical tourism is also something we also need to do. If anybody wants to do kidney transplants or any critical ailment, it's either you go to India, you go to UK, or you go to US. So if government can also put it in place by ensuring that we have good medical infrastructures on ground, we have first-class hospital, we have first-class diagnosis center, and other things that can discourage medical tourism, because life is very critical to everybody. So as a nation, when you do have those equipment, how many of us are even using the government hospitals? Because some of these government hospitals, you hardly see drugs, you hardly see qualified doctors because they cannot recruit qualified doctors. We've seen that some months ago, the Nigerian Medical Association, they said they want to go on strike, and the resident doctors as well. They are not paying their salaries. So until government is able to address some of these issues, the inflow, what people are taking as efforts for medical tourism, it will also have positive impact in our economy if we can put those things in place as a nation and discourage medical tourism. And then we also need to restructure our debts, because if you take debts, if you borrow money in foreign currency, if you want to service, you also need to look for foreign currency to service those debts. So there's a for us to also reduce our external debt. By doing that, we are going to reduce the level at which we'll be servicing the foreign loan with foreign currency, and that will not also put pressure on our exchange rate, and then it will be our reserve over time. So other development under new administration in the last 2 months now, it's not up to 2 months, but I mean, I think it's more than, they are less than 60 days in office now. We've seen some developments that has really improved the equities market and other important markets in our economy. And we've seen suspension of the CBN governor by the new president. We've also seen the suspension of a EFCC chairman as well. And the dissolution of the board of federal parastatal and agencies, with replacement of head of security agencies. We've seen Nigerian military, they've changed the service chief, the chief of defense staff, army staff, navy, and all that. So some of these decisions have been taken with the view of addressing security challenges, because security is also very critical to our nation. So we are hoping that over time, the changes or the appointment of the new service chief will be able to solve security problems, and that will also have a good impact in our production, in agricultural production, and then there will be peace in our country, and a foreign investor can also leverage on the peace in our country to also come and invest in a critical sector of Nigerian economy, where they can also benefit and make profits. So the tax, I also talked about the tax the other time. The government is also planning to increase the tax, and I've seen some decisions being taken in the area of tax. They have appointed a technocrat, Mr. Taiwo Oyedele, who used to be a technocrat in the PwC. He's the head of the tax reforms now. So I think these are the things they are also trying to do to also address the revenue problems. So these are the part of what we have seen in the last 6 months, or trying to see what had happened in the half year of the 2023. And then we have also seen executive order, tax reforms committee, to also reduce ease of doing business, because when multiple taxation also used to have negative impact on the production or the profit level of each company. So when all those things are not being addressed, there's no way we are going to attract investments into our country. We've seen that they've given a waiver to MTN or a particular tax that was proposed by the former administration. So that will also give relief to the MTN as a telecom giant, and there's no way it will not have impact, a positive impact on their balance sheet at the end of the financial year. We've also seen the inauguration of the National Assembly. What we are just expecting is the appointment of the ministers that will drive the critical segment of Nigerian economy, like the finance, the police affairs, the agriculture. So we are expecting the technocrat should be appointed to be able to drive those areas and improve the situation of our nation. So now we were just trying to look at our GDP growth rate, because we've talked about some critical macroeconomic indicators, but GDP growth rate play an important role. That's what determines whether we are growing as a nation in terms of economy or not. If you see this bar chart has showcased the movement in our growth rate since Q3 of 2021 and Q1 of 2023. Of course, Nigeria as a nation is situated in economic recession in the fourth quarter of 2020 because of the coronavirus, when countries of the world eased the lockdown. They removed those bottlenecks. We could see production that has really slowed down major economies of the world. But in Q3 of 2021, we could see that GDP growth rates we recorded 4.03%. That's in Q3. But look at the figure because of time, look at the figure in Q of 2023, we recorded 2.31%. So what has been responsible for the decline in the GDP growth rates is largely because of the cash crunch If you remember, the CBN brought the currency design in the first quarter of 2023, and then Nigeria as a nation, we are still if you look at the contribution or activities in the informal sector to the formal sector, a lot of things are also taking place in the informal sector, and then some of those things also require cash. So when this policy was put in place, people were prevented, people could not have access to their funds. That actually slowed down economic activities across various components of the GDP growth rate. So that was why we recorded a positive growth rate, but it's slower. So that was the reason why it declined in the Q1 of 2023. The result for the second quarter is not out yet, but we are expecting it to be pretty probably in a few months to come. The NBS that is responsible there will release it, but we are hoping it's going to be better than this, because that was exactly what actually reduced the impact of economic activities in the Q1 of 2023. And besides, you should also not forget that the major drivers of the GDP growth rates, we've really not been able to explore other avenues in trying to diversify our economy, where we can also earn and grow other sectors to be able to drive the GDP growth rate. The focus has always been on the oil production, which is not good. And we are not even meeting up with the standard of OPEC. We are supposed to be producing 1.8, but we are less than that. So it's like a shortage to us as a nation, and is impacting negatively on our foreign exchange earnings. So the average crude oil production has also improved in the month of May to about 1.34 to about 1.5 million barrels per day. It used to be 1.31 million barrels per day. In fact, at a point in time, I think it was around middle of last year, we were doing 900,000 barrels per day. But the situation has improved. We've seen calmness in the agitation in the Niger Delta, the oil vessels, the bunkering and all the activities has also reduced, not to the barest minimum, but the government is overseeing that for them to be able to improve their revenue. So we expect the second quarter GDP growth rate to be better than the first quarter because of what happened in the first quarter that actually prevented a better growth rate. So this is what this bar chart is talking about. So as an extension of the previous charts, the component, what this slide is just telling us is that if you look at the slide, you could say that we have GDP growth rates, GDP component for Q1 of 2023 and 2022. We're just trying to compare what happened, why the Q1 of 2023 also declined, why did Q1 of 2022 also improve? Because in Q1 of 2022, we recorded 3.51, why this one we recorded 2.31. If you see, look at it, you could see that you could see some red in the bar chart. You see some component in red. We said they have also declined. While in Q1 of 2022 they improved, but in Q1 of 2023 they declined. The crop production declined to about 19.48, while in 2022 we recorded 19.55. The same thing for the trades. Trades also went down in first quarter of 2023, largely because of the CBN policy as regards the currency redesign. So trades is about commerce, it affected the trade and commerce. And then the crude oil production also declined in the Q1, but now the situation has improved. You know, I said it in the previous slide that we've been able to move from 1.31 million barrels per day to 1.5 million barrels per day now. It's an improvement. So that was why I said there is a tendency for the Q2 GDP growth rate to be better than what we did in the first quarter. So this is what this chart is talking about or telling us. And this is an extension of this slide as well. So what this thing is trying to just summarize is that out of 19 sectors in 2022 that expanded, in 2021, only 15 sectors or 16 components of the GDP growth expanded. So out of 19, in 2022, 19 expanded, one in 2021, and in 2023, Q1, 15 expanded. So 4 components of the GDP growth rate in 2022 suffered a decline. So they are what I talked about: the trade, crude oil production, and the real estate. So moving down to another important variable is inflation. Inflation is very critical to every investor, either local or international investors, because you want to be sure that inflation is one of the critical variables that determine what investment environment of a nation will be. If inflation is on the high side, of course, volume portfolio investors will not be willing to bring out their funds to your country. So if you see the 2023, Nigerian economic at 2023, we are trying to look at inflation rates, and the bar chart is talking about the movement in the inflation rate from 2022 to 2023. But if you see this chart, starting from the June 2022, inflation has been on the upward trend. In fact, in the last 15, 16 months, inflation has continually increased by 15 times, from 16.60% to the month of May, when we had 22.41%. 3 or 4 days ago, we also got a new figure from the NBS, that we are currently at 22.79%. Inflation has also increased by 36 basis points. And then you and I know the reasons why inflation is still on the upward trend. So we expect that the MPC committee of the central bank that is likely to meet next week, Monday on Tuesday, they may likely to tinker with the MPR rates from 18.50%, maybe probably to 19%, because that has been the major tools they are using to curtail the upward trend in the inflation, and their inability to also address other critical areas. But that is the major tools other countries of the world has been using to tame inflation. So because inflation is something you need to tame, if not, it's going to really affect the growth of your nation, and then you won't be able to attract an investment to be able to address critical problems you have as a nation. And then for the external reserve too, if you look at this bar chart as well, external reserve has also been on has also continued to deplete from the month of July 2022 to the month of June 2023. And the reasons for depletion are not so far-fetched. Firstly, I've said as a nation, we are not producing enough. We have not been able to truly diversify our economy. Number one. Number two, look at our oil production. We've not been able to also explore opportunity in the area of meeting our quota system in the oil production. So we are currently doing 1.5 as at May, when we're supposed to be doing 1.8 to also surpass our target of 2.2 or 2.5. We have various oil wells, but it's because of the lack of commitment, lack of political will from the government to solve all these problems. So that is why our external reserve will continue to deplete, because as a nation, we need to support our trades. And then the only instrument you have, the only reserve you have to support your trade is your external reserve. So external reserve will continue to deplete. Currently, as a month of June, external reserve has depleted to 34.2%, which we expect more, except we're able to build it. And in terms of a manufacturing performance, there's a component called Purchasing Manager Index. The Purchasing Manager Index is an indicator or an index being used to measure the performance of manufacturing industry. If the index operates within 100 basis points, within 100. So if the index is above 50, it means there's an expansion in the manufacturing. But if the influence also declines, of course, it shows that it's below 50. It means there's a kind of contraction in the manufacturing. If you look at the green graph, the green bar chart, we've seen movement in the PMI from August 2022 to the June 2023, and we could see that in the month of February, in the month of March, those 2 months, we had less than 50%. We had 47.7%, and we also had another 42.3%, because those periods, those 2-month periods, happens to be the period of the currency design in Nigeria, when people don't have access to their fund. So you could not buy. When you could not buy, there's no way to not affect the manufacturing output, because whatever thing they have also produced need to be consumed. But when there's no cash to consume, it will limit. There's no way to not limit the activities of the manufacturer in terms of trying to increase their production. So that is why that has also gone down for those 2 months in the Q1 of 2023. So exchange rate is also another important variable we also need to look at now. If you look at the exchange rate, there are 2 major lines. We have seen the official rate, which is being denoted by the blue line, and we have also seen another word, parallel line, which is a parallel rate, which is also being denoted by the orange line. So if you see that, you will see the blue line at the bottom operating above 400. That was the period the CBN was using our currency to support Naira. I mean, we were using dollar to support our currency. They will give rates to some people at the official rate, while the other people will go to the parallel market, which is the black market. So if you see what happened in the month of May, you could see a movement in that line. That straight line now begin to go up because it's now converging with the parallel line because of unification of exchange rate. So the era of somebody taking official rate from the central bank has completely been eliminated. Everybody will access the same markets now. So there's a uniformity in the exchange rate. That is why the line will converge over time. So let's also look at the fiscal policy and monetary policy of the government. What are the things they are planning to do in those two areas? Because the two major policies to drive every economy is the fiscal policy and monetary policy. Any government or any nation that cannot get those things policies right, there's no way you'll be able to improve your situation as a nation in terms of growing your growth rate, in terms of improving your economic activities and solving major challenges you have as a nation, building your reserve to make your business or goods more competitive with other countries of the world. So these are the policies we are also expecting from the administration. Number one, on fiscal policy. The first one is that elimination of subsidy removal. That has been crystallized in the inauguration. The president said it at the inauguration that subsidy is gone because there was no provision. So that has taken place. So that's one of the fiscal policy decisions being taken. And second policy has to do with the palliative to also reduce the impact of subsidy removal, because government also have that responsibility to cushion the impact of the subsidy removal. But we are still waiting for the government to come out with a good, a robust action plan, because about 3 or 4 weeks ago, they were saying they want to give 8,000 naira to 12 million Nigerians. I was saying it in one of our discussions on one of the platforms that that is not going to have any impact, but rather it will create inflation, because we are looking at the impact of 500 billion naira that is going to circulation. It will increase the amount of money in circulation, and then it will increase the inflation. When inflation also increases, they are making Nigeria more poorer. So, but I think they have also put that policy, they've been able to put it aside. We are also expecting them to come out with a good action plan to address that issue. So that's another policy. And then we are also expecting implementation of the cost-effective hike in the electricity. I think government also need to do something to also improve that situation, because if electricity is also available and it's constant, the money household is also spending on buy fuel to fetch their generator will also reduce, because electricity is still cheaper when you compare to the PMS. And then in future, the government will be able to save more money to be able to finance their critical infrastructures and develop our economy at federal level, at state level, and at local government level. And then in terms of the policy, we've seen Naira has been floated, it's now a fixed exchange rate. But another thing they have also done as a policy is that they have also lifted a restriction on the dorm account. So people can also use dorm accounts, at least they've restricted that. They've removed the restriction on the dorm account to also attract inflows. People can send money to the dorm account of their families and relations. And then the cash deposit in domiciliary account will no longer be restricted as well. You can pay money into the dorm account and you can also withdraw. These are the things they have also done to also improve or to make monetary policy more stronger and improve banking and financial service activities. Our expectation is that the CBN is likely to continue to adjust the MPR on the level and direction of inflationary trend, because even the World Bank, the Bank of America that also visited the president about 3 or 4 weeks ago, they said that Nigerian inflation is expected to get to 500 is likely to increase by another 700 basis points. It means we are going to add another 7 points to what inflation is currently trending. So we should be looking at almost 30% inflation. I think government is a signal to the government that they need to do something to address that issue. So to minimize the impact of inflation, that's very important and critical to our economy. So let's just go to the financial markets. The equities market is the major component of financial market. We've seen this slide is just telling us what we have recorded as success in financial in equities markets. In the last in less than 60 days, the equities market has recorded a major improvements. The all-share index, which is the barometer to measure performance of the market. Don't also forget that one of the things you can use to determine efficiency or improvement in any economy of the world is the performance of the stock market. We've seen that the all-share index, which is the only major barometer to measure performance of the stock market, has also it has gotten to 60,000. And then in the half year, we have done 60,000. If you look at the entire year of 2022, we reached 51,252 basis points. But as at half year of 2023, we are done 60,096 basis points. So it's very good. And then the changes in terms of ASI percentage, we are done close to almost 18.96%. That is also very good. So we are expecting that over time, some of this policy we have entered in our markets, and then we also have improvement in every Nigerian household so that people will be able to have a more disposable income, and they can also invest and also save as well. So in terms of market capitalization, our capitalization has also gone to 33.2 trillion naira. Market capitalization is only telling you the number of equities that are on the market multiplied by the price of those equities. If you could see that it has also gone up, the percentage change is about 18.74%. That is also an improvement. And in terms of average volume has also gone up to about 551 million units from 281 million units we recorded in last year, as of December last year. So that's average, and that's about almost 91.17%. While for the traded, in the last 45, 6 days now, we have been doing a daily trading volume of almost 6 billion compared to what we used to do before, about almost 4.15 billion. Is also an improvement. In terms of percentage change, that's almost 44.82%. That's also very good. In terms of new listing, we have not recorded any new listing in our markets from the year from January to date. So maybe probably between now and the end of the year, we could see more companies coming to list. So this graph or this slide is just trying to do a comparison between the foreign investors and domestic investors. And the second bar chart is also telling us the movement between domestic retail investor and domestic institutional investor. Look at the first chart. That's where we have foreign versus domestic investor, 2022 and 2023. We could see that the charts, the bar chart with a dotted wine color, is indicating domestic, while the other one, the blue color line chart, is foreign. We could see that that chart from July last year to May has actually surpassed the blue, meaning that domestic investors' participation in equities market has gone higher than the foreign portfolio investors. And the reason why we have not been able to attract foreign portfolio investors is because of our FX problem. But now that it has unified, we're expecting more foreign participation in our equities market. The same thing for the other graph. We have also seen that domestic retail investors, they have also patronized the market more than the domestic institutional investors. They have also patronized the market than the domestic retail investor. It's also a kind of improvement. People now have more confidence in our markets now because of some of those policy government is also putting in place, especially in the last 2 or 3 months now, which we are hoping that is going to bring efficiency and improvement in our markets going forward. So this is just the performance of the stock market across Africa because of time. So we've seen that out of all the markets across Africa, Zimbabwe has topped has done better than all, has done best than all other countries. They've done about 7 in terms of performance. All share index, they recorded 781.76%, while Malawi also follows 73.6%. In Nigeria, we are currently at 18.91%. And then the least countries are Uganda, that's negative of 16.94%, Kenya at 15.91%, and then Tanzania, they are also at negative of 3.48%. So their stock market is not really doing as expected. So you may not really see investors patronizing some of those markets because they want higher return. This is what this graph is talking about. And then in terms of the fixed income market as well, we have also seen that because of the institutional investors, they also need to diversify their investment in various asset classes. If you see the participation or activities in the fixed income market from January people that have been more subscription than the issue bond at primary markets. In January, we've seen that it was oversubscribed at 230, 221, 223 billion, and in February, 275 billion. And then in April, getting down to the month of June, the oversubscription between the issue and the bid as at June was about $176.42 billion. And because the yield is also very attractive, so people are also moving to that space because fixed income, the volatility is not as high as equities. People also need to structure their investment towards that area. And because some of these fixed income instruments are also guaranteed, so people, you could see more participation and oversubscription in terms of remarks from January to date. And that will continue to happen in the fixed income instruments. But the truth is that it is a space you also need to invest because you need to diversify your investment across various assets, not only equity. So it is an area you also need to go as an investor. So that is for the fixed income markets for now. And these are the listed corporate bonds as well from January for the month of June 2023. We've seen FCMB, they have also listed these are the corporate bonds. These are the companies that also issue corporate bonds. That's domestic corporate bonds. We have FCMB, we have Dangote Cement, we have Union Bank. They're also exploring fixed income market as well, not only equity. So that is why in the last 2-3 years now, you hardly see companies coming to the equities market to come and raise money, except few that are raising money through rights issue. Most companies have been exploring the fixed income market as well. So this is why we have all these bonds listed. They've raised money in the past, but they have listed for trading. So this is also, this slide is also talking about the global bonds as well. So this is the performance of the global bond. But you could see that inflation in those countries is as minimal. United States 4%, Canada 3.4%, Brazil 3.94%. So you should not expect higher coupon rates in some of these developed economies because their asset is not risky, unlike emerging markets or developing nations. So that is why the coupon or interest rate on the fixed income instrument, especially for the Euro bonds, is lower compared to the one being issued in the emerging markets, like Kenya, Nigeria, Angola, and a few other countries. So our expectation for the year. So expectation for the rest of the year, we've talked about review of the half year, the policy direction of the government. So let's just quickly run through expectation for the rest of the year. These are the main drivers of the we are going to talk about as expectation, the crude oil price and production, and then the political developments, what are the budget outlook for 2023 and the global economy. Let's just start with institutional reforms. There's a complete overhaul of security architecture. We talked about it, that they've changed the security and paramilitary agencies to ensure that security is also team in our country. We've seen crises in the Plateau, we've seen crises in other countries, in other parts of Nigeria. But the security, they are also making effort to ensure that all those things are being, the perpetrators are also being brought to book to discourage further occurrence. So in terms of institutional reform, we've seen complete government need to overhaul the security architecture for them to be able to solve that problem. From the Navy, Air Force, Police, Custom, and other paramilitary institutions. Reform will also include the Federal Civil Service and there's some political institutions, because the federal institutions, the Federal Civil Service, they also need to be more active and more proactive. So that is, the activities can also improve our performance as a nation in terms of the GDP growth rate. So all those bottleneck bureaucracy also need to stop, and efficiency need to be brought into our federal institutions as well. And in terms of economy, the government is also planning to increase the tax net, which is one of the reasons why we've seen some executive orders from the new president that they want to do a reform in that regards to also boost our revenue and be able to solve some of our problems as a nation. So we also expect an increase in electricity tariff at the end of the year. We cannot rule it out, they will increase. And in terms of legal environment, they are likely to tighten. Monetary policy will continue to be tightened because inflation is still on the upward trend. And the foreign exchange will continue to be more liberal and then towards FS and FDI. So with uniformity of exchange rate, we are going to attract more foreign investors, and then it will also encourage diaspora remittances. Government is likely to also adopt they may also consider Oroshaye reports. You remember that used to be the former head of service of Nigeria. I think about some years ago, there was a report that some agencies also need to be merged to reduce the cost and make them more effective and efficient. And we saw that the new president also set up a committee, economic subcommittee, being chaired by Senator from the Lagos State, Senator Tokunbo Abiru. They also recommended that some agencies need to be merged, NIMASA, a custom, and the other agencies for efficiency, essentially to improve the revenue of our nation and reduce our exposures to the foreign and external debts. So these are the things you will also see as outlook. And they are also doing that to also address our revenues challenge. So the 2023 budget will run based on those assumptions, but maybe probably the 2024 budget that is likely by the end of fourth quarter of 2023, the National Assembly and various government agencies, they may start preparation of 2024 budget. So we're going to see impact of some of this policy in 2024. Subsidy, there will be provision for the subsidy for the whole year. So, and then let's also talk about the global economy. And of course, the Russia-Ukraine invasion that started in February is still lingering. So it's still affecting other countries of the world. And that has also increased the inflation rate in other countries of the world because of the role they play in trade and economic activities. So in terms of some of the available products, the gas, they are known for gas, they are known for agriculture. So we are still feeling their impact. It's still affecting the other countries' inflation. So Ukraine inflation, though it will slow down the world growth rates because they play critical role in economics of the whole world. So yeah, the growth rate for the whole world is also going to slower because Russia inflation is still lingering. And then further, food prices will also increase. If you look at the cost, the food inflation being released by the NBA, it has also gone up because of the increase in the price of PMS and then instability or insecurities that has also made it impossible for the farmers to be able to farm. These are the issues that will affect the global inflation, and it will affect the global growth rate because it will slow down the growth rates. So the global GDP growth is projected to be 2.7%, lower than the annual growth rates since the global financial crisis, with exception of 2020. So if you look at 2020, we've talked about the coronavirus that ravaged all the countries of the world, major countries of the world. Of course, that one is understandable. But the Russia invasion of Ukraine is also affecting other countries of the world. Nigeria is not left out. So the GDP growth rate for the entire world is going to be slower. So they also there is need for that issues to be resolved and the two countries to also dialogue and solve that problem and ceasefire. So in 2024, we're going to see an improved 2.9% in 2024 in terms of the growth rates, because of some of the China has also lifted their lockdown. They are back to production, and if you look at the position of China in the world economy, they are among the first 5 biggest economies. So their impact will also be felt in terms of growing the world GDP growth rates. So this is talking about the implementation of 2023 budget. The debt servicing committee needs to be met. So they need to ensure that they meet the debt service. So it's part of the provision they did in 2023 budget. They also need to pay staff salaries, transfer, and other components of the budget. So all these things needs to fulfill. And the Ministry Department of Events Capital budget may suffer because of some of the contracts also need to be renegotiated and be re-awarded. When new addition, anytime they come on board, they usually review contract. Of course, contract review, it can be upward, it can be downward. So there's no way it will not affect implementation of the budget. So they have to review some of those budgets. These are the things that we are expecting in terms of outlook for the rest of the year. So you have to see some of those things happening in our economy. This is just talking about the crude oil price across the globe. So currently, about 3 or 4 days ago, they said the price of the PMS has also increased to 568 naira, because the price of the Brent crude in the international market has also gone to $82 per barrel. So there's no way, $82 per barrel. So there's no way to not affect the PMS, because we are still importing our PMS from the other from other countries of the world. So the underlying effect of increase in the price of the crude oil in the international market, that it will also improve the pump price. But let's wait. I pray all of us will live longer. We would like to see whether governments can justify their actions by the time the global oil price now comes down. We want to see whether the price of the PMS will also reduce. It is when such things happen, Nigerians can now have more confidence in the government's actions and inactions, because now people have reacted to it. A lot of people are shouting that the government is making people poor and their policies is anti-people. So, of course, you have to see fluctuations in the price of PMS in the next few months, because as the price of the oil price is changing in international markets, it will also affect the price of PMS, because we are also importing it until we are able to improve our refineries and start producing. So this is just the synonyms or the movements in the price of the crude oil across the world since 2014. We're going to send this slide at the end of this webinar. So I think I have talked about this. The global oil price is also going to trade lower. The price of the crude oil is also going to be lower, because as a nation, if you see other developed countries of the world, developing countries of the world and developed countries of the world, they are looking for alternative source of energy. Countries, we've seen electric cars, we've seen cars that are using gas. So Nigeria as a nation, we also need to improve our own, we also need to tap into that sector, because we can't be depending on the crude oil. So any nation that is still depending on the crude oil as the major source of energy will find it difficult to survive their economic in few years to come, because of technology that is moving across the globe. So the crude oil price in the future may come down, because demand for the crude oil price may be lower in the international markets. And the law of demand says that when demand is lower, supply is going to, the price is going to fall, and vice versa. So countries won't be demanding for the crude oil because of improvements in the technology. They are going to leverage on that. So as a nation, we still have a long way to go to ensure that we are not only depending on crude oil and do other things to be able to earn more. So I think it's an area government also needs to look into. So we're going to see a decline in the price of crude oil in the near future. So this is I think we've also talked about it because of time. This is just the growth rates. What we are seeing in the growth rates, Ukraine war is also reflecting on the global economy, and is also affecting the local economic as well, because of some of the items or goods that we are getting from the Russia and Ukraine to support our economy. We are not producing some of those things enough. So it's still affecting our nation. Even some other countries of the world, the Westerns are also now finding it difficult as well. So this is about economic growth rates. And then inflation, I think we have also talked about inflation because of time. So has also moved into the weekend. So they should have met yesterday and today. Tomorrow they should also meet, but because it has to. So, but our prediction and expectations that they are going to increase the interest rate, maybe probably to 19 by 50 basis points. We are at 18.5%. They are likely to move it to 19%, because the last time they met was in May, and inflation for the month of May also moved up. Inflation for the month of June also moved up. It also moved to 22.97%. So for 2 months consecutively, inflation has also gone up. So they have to do something. And the only thing they can do now is to also increase the interest rate by 50 basis points, maybe probably put that at 19%. I said it before that the body language of the president may not really allowed the MPC committee to include the interest rate. But the committee is powerful than the presidency because they need to do their job. It's about economy. It is not president giving order. It is a decision that needs to be taken to save the economy. So there's a tendency for them to increase the interest rate by another 50 basis points. They can be moving to 19% now. So exchange rates will, in future will also standardize, and then you will see moderation in exchange rate. Of course, it's on the high side now. About 3 days ago, I think at parallel markets, of course, we are seeing parallel market and investors, exporters window, they are almost at par. But about 2 or 3 days ago, Naira was also exchanged for dollar at 835 Naira. But the truth is that over time it's going to moderate because it's market determined. The benefit of market determined activities is that you see fluctuations, and over time it will also moderate. With some of the policy being embarked upon by the governments, we believe it's going to have a very good impact in the FS because it's going to attract more voluntary investors and a foreign money direct investment. And with that, we can build our reserve, and then we can also have enough dollars in circulation for us to be able to settle or balance our trades. External reserve, I've talked about it, to continue to deflate until we're able to do something to improve it by diversifying our economy, other than depending on the oil. And then in the area of oil sector, we also need to improve investment in the oil sector. Now that the oil sector has been fully deregulated now, it's also going to attract more investment in that sector. And then once investment is also attracted, it will also improve our external reserve as well. So stock market outlook, of course, we've said that restriction and disruption in businesses will continue to contract the corporate earnings. So there's no way it will also, of course, companies will continue to improve in their corporate earnings. But the truth is that some of this bottleneck, until they are fully removed, it will have a negative impact. We have seen results for the second quarter. The only one that has come to the market is the United Capital. And the truth is that I think they did better than what they did last year. We are expecting other results from the banking, insurance, consumer, and the manufacturing. By the time we have some of those results, of course, our research team, they will also send some of those results to you. And we also find time to also discuss the performance of the company with you to see what this company has done for the half year. But with the one we have seen, I think they have done better, except maybe probably 1 or 2 companies. But United Capital, the accused second quarter result and the half year, we've seen some improvements. We're also expecting a similar thing to happen to the banking industry, to the banking stock as well. So fairly half-year result, corporate earning we had to the momentum, and then it will also spur people to also patronize the stock market now. The rally we have seen in the last 6 weeks now, it's about government policy. In the month of May, market recorded 2.3%. In the month of June, it also went up by about 4.94%. So when you look at the combined effect of the movement in the last 7 weeks now, market has recorded close to over 10%, which is quite impressive. So good stock market is also an area you also need to invest. Don't lose your fear. Go with stock with fundamentals. Of course, we'll talk about it in subsequent slide. Sectoral outlook. So I've talked about opportunities that are available in various sectors because of time. Fixed income, we have also talked about the fixed income. Okay, this is just a summary. The ongoing reforms are also anticipated in the coming together in the months. Some of these reforms the government has also embarked upon. They are going to consolidate them. After that consolidation, we'll begin to see the impact in the various segments of our market, and then we'll see those opportunities. Stock market is a good place to go, but you have to trade with cautions, listen to our recommendations. Of course, our recommendation is always timely. We always guide our valued investors based on company with fundamentals. So that is very critical. We are not saying you should not go for the penny stock, but a rational investor should be after safety of your principal, not your return. Because if you are saying you want to put 100,000, you are expecting that 100,000 to pay to 300,000. Of course, you are taking a risk. We are not saying it's not available. What is very important is that you need to ensure that you buy a stock with a good fundamental. Even if the price comes down, you can invest in some of these bellwether stock. Bellwether stock are stock that irrespective of the downturn in the economic activities, they always withstand some of those downturns. And then over time, they will go back to their original prices. If you check the price list or the recommendation of Lead Capital PLC from time to time, you'll see that we have specific stuff we are covering across various sectors of our market. So stick to that. We encourage you. If you want to invest in any penny, so please contact us. Let's see whether it's worth investing. We are not saying crude stock are not good, but they must be driven by fundamentals. So due to the effect of the subsidy removal on the cost of transportation, headline inflation has been predicted to also increase. I have talked about it, that headline inflation is also going to go up because until the government is able to do certain policies, they are able to leverage on certain things to minimize the impact of inflation. One of the things we need to do is to ensure we improve our agriculture. We also reduce, when we reduce our agriculture, we improve on our agriculture, we're going to have more commodities in our markets, in the economic system. So the dependency on the imported items will also reduce, and government also need to also encourage the SMEs, so that when they encourage SMEs can also produce, and we can also export them to other countries of the world, and we also earn a currency in form of earnings to also build our reserve and also support our trade. So MPC, they are meeting next week. There's tendency for them to increase the rates to stem or to minimize the effect of inflation that has been on upward trend in the last 2 months. Don't also forget that I said inflation has been on the rising level in the last 15 months. So they have to use that to also bring that down inflation, because our inflation is not good for our economy. So sectoral opportunity, financial service sector, we have opportunity in financial service industry. For the FS, is going to improve the performance of the banks in terms of making more money. FX banks that have dollars before that devaluation, their asset is going to increase. The balance sheet of the bank will also increase, and then that will also improve their liquidity. They have more money to grant to people that want to take loan, and then that's the core banking business, granting loans to the people that want to do businesses, improve their interest income, and then it will now cascade down to a profit after tax, and then they'll be able to declare good dividends to various investors or stakeholders in such listed companies. So for the financial service sector, we have opportunity that the banks will do better. So higher capital requirement, simplify legal structure. And then for the telecom as well, I said it that the Ministry of Finance, the federal government, they have also relieved MTN from a particular tax. So through this executive order, so we should expect a better performance in the balance sheet or the profit after tax of the MTN, because that component also play an important part. By the time that component is removed from their balance sheets, is going to have a positive impact on the profit after tax at the end of the financial year. So there are opportunities for the fintechs in the telecom, and then they're also leveraging on the 5G licenses. They have also increased the coverage beyond Lagos and other major cities now. So the improvement or the increase in the coverage will also give the opportunity to be able to improve their income, because people will buy more data, and that is also going to affect their performance positively. So we should expect more return from the MTN, maybe probably by the time you see their second quarter result as well. We'll be able to advise you on our written position on the MTN. So for agriculture, although it declined, so it is an area government also need to look into at federal, at state. But the things that saddens me most time is that even the governors or the elected officer, they have not been able to leverage on agriculture to be able to gain the heart of electorate. Because as an elected officer, if you want to be elected, all you need to do is to ensure you deliver the dividends of the government to the electorate. By ensuring you also leverage on agriculture. If you leverage on agriculture, some of those things we also have, you increase SMEs, they will support SMEs production activities at federal, state, and local level. And then it will appeal to the electorate. They'll be able to vote you in. So that won't be the issue of sharing money to people vote buying. What they are sharing using for vote buying is enough for them to be able to appeals to the electorate by addressing those areas, leveraging on agriculture as well. That will have served as a simple political tools for the politicians. But I don't know the way politicians think. They are always selfish, except few ones, which you and I don't know until we evaluate what they have done to their consistency or to their states. So that's for the agriculture. So for the oil and gas, I just have like 2-3 minutes to wrap up this webinar so that we can have time for questions. So for oil and gas, the sector has been deregulated. So for the downstream, it has been deregulated. And then we could see about 3 or 4 weeks ago, there's an institution called Nigeria Midstream and Downstream Regulatory Commission. They've gotten application from few Nigerians that they wanted licenses for them to be able to get import licenses. So they want to grant them. So they want to, because the oil sector has been fully deregulated. So there's a kind of level playing field for all the operators. So it's going to create employment, number one, and then number two. We have also seen that all the companies are also operated in the downstream, the likes of Corn Oil, Total, Eternal Oil. We've seen the way and manner their share price has moved. So by over 200% because people are anticipating better return from some of those companies because that sector has been fully deregulated. So these are the opportunities that are also available for people that also want to operate or also invest in that sector. You will see better corporate earnings from the downstream sector of the oil sector. Of course, the oil sector, the upstream, which has to do with exploration, that has been politicized. We cannot really say much on that. I think the only companies that is on the upstream is the Seplat. So for Seplat, is politicized because we don't know the way the allocation of the oil blocks to the operators has not been transparent. So, and that is one of the reasons why the oil sector, the upstream, is still having issue. We have not really seen better improvement. That upstream has not been able to attract a good investment in Nigeria because it has been politicized. You could see a presidency, the president, vice president, they are allocating oil blocks to their friends and their relations or their business partners. So all this thing needs to be stopped because until they're able to do that and ensure that the transparency in the upstream, that sector will continue to suffer. But for the downstream, the subsidy removal means that that sector has been deregulated. So there's a great opportunity in that space, in that sector. So for our stock recommendations, because in our various webinars, we always find time to share our various stock recommendations. Of course, we do it weekly. And anytime we have opportunity like this with the webinar, we try to also showcase our stock recommendation. For the banking, of course, we're going to send this slide. And there is something we also send out. We used to send it out on every Monday, our stock recommendation, so that you can pick from it and you can also contact your RM. For the stock recommendation for the Access Bank as of yesterday traded 16 naira 60 kobo. So, and then our target price based on valuation, we are looking at 20 naira. So it's a strong buy, so you can buy. You also forget that Access Bank has also been expanding. They have been leveraging on acquisition over time. Some of those things will put their balance sheet, and then you see them improving their return. We saw what they did in 2022 financials. They surprised the market from 70 kobo dividends to 1 naira 30 kobo dividends. We are expecting more. So it's a good buy in the banking sector. And GTB as well, our target price is also 14 naira, is trading 33 naira 70 kobo. So do also forget that it's one of the biggest banks in Nigeria. And then they are also expanding. They are also, if you look at it as well, they're also operating an old school structure. So they also leverage on their pension and the asset management subsidiary, so to also consolidate their performance in the core banking business as well. It's also a good buy. UBA as well is also a good buy. It's a strong buy as well. Zenith Bank is also a good buy. That's for the banking sector. And then for the insurance sector, we are also recommending ICO Insurance. It's as of yesterday, it closed 70 kobo. And then the target price is 85 kobo. So it's also a strong buy. So our ICO is also a very good insurance company in Nigeria. They operate in Nigeria. And then we've also seen that in terms of performance from their results, they have been growing their results from time to time. So it's a good buy. is trading low. Custodial insurance too is an investment. Now, it's not only insurance business they are doing, they are also into asset management and other businesses to consolidate or to complement their insurance business. So it's also a good buy. It closed 6.90 naira yesterday, and then our target price is 8.30 naira. So we're also encouraging you can buy. So for the insurance, those two. And then for the packaged goods, or we call it consumer goods, our two major recommendations is Flour Mill. Flour Mill closed 13 naira yesterday. Of course, the market is also trading. We don't know what the closing price of today is until 2:30, but it's a good buy because Flour Mill will get to 14 naira from our valuations. And then this is a company that has also acquired a substantial stake in the Honeywell to also expand their market and to expand their sales. So the expansions in the market and the sales will cascade down to the profit after tax, and then they'll be able to give good returns to the company to also complement the backward integrations in the area of agriculture for them to be able to reduce the burden on sourcing their materials from other countries of the world. So for Nestlé is also a good buy. So UCAP is also a good buy as well. Nigerian Breweries is also a good buy. So for agriculture, Ukomo is a good buy. For pharmaceutical, May and Baker is a good buy. So, and then for telecom, we're only recommending MTN. So thank you. So this is the end of the webinar. So I think there's time for question and answer. So I will check the chat box to see if we have question and answer so that we can quickly address it and interact with you and share some of our opinion on some of those questions and our recommendation. Thank you. Can we look at the question and answer chat box? Hello. So this webinar has come to an end. So I want to use this opportunity to share with you that this slide will be forwarded to all the people that register for this webinar. You're going to get the recommendation and where you need to ask questions regarding some of these slide areas that you think is not clear, need more explanation. You can reach out to us through our customer service number. It's available on our website, Lead Capital PLC, and then you can also reach out to your area. But we want to assure you that from time to time, we'll be interacting with you and then we'll be sharing our stock recommendation. So having said that, I would like to use this opportunity to thank everyone for attending this webinar. So my colleagues, Mr. Nnamdi is going to help us to do the vote of thanks to all the attendees. Thank you.
Thank you, Mr. Kolade, for anchoring, for proceeding to this webinar. We want to say thank you so much, and we are looking forward for your question. Our chat is open for everybody to ask a question if you want us to answer your question. So you can send your question. Even though we didn't reply through this chat, we can still reply your question through customer care units. Thank you once more. Okay. So yeah, we are coming to the end of the webinar. Thank you. Thank you. Bye-bye.